what an interesting and exciting, defining moment we are in. We live in a changing world, extraordinary set of changes and challenges we are witnessing, and every day is a new day. Inspirational, sometimes motivational, I should say. So much acceleration in terms of redefining personally, professionally, in this interconnected, interdependent world. Of course, COVID-19 is a tragedy in substance. World over, if you look at a bigger picture, human risk, social risk, economic risk, environment risk are all enlarging on a daily basis. Many variants are showcasing its toes. 221 million people in global terms were impacted. We lost nearly 4.44 million people. That's huge. It's tragic, truly, to the humanity. Qatar itself, we lost 601 persons. Qatar's wise governance managed it so professionally well in all the dimensions which I mentioned. And damage control has been well executed. Today, we have over 80% eligible population has been vaccinated, double dose. The financial measures, the economic measures, the convergence of the monetary policy and fiscal framework across the globe has set in some solvency to the changing face of the world. But sustainability is the name of the game. Sustainable development is what is required. If you look at the major picture in terms of the changing face of the economics to start with, the global growth was a contraction last year. That was around 3.2%. When it comes to revival this year, the prudent measures taken in terms of financial stability, economic alignment, convergence of politics and economics have made sure we have a clear roadmap in terms of recovery. Now we are seeing a possibilities of 6% in real order for the global growth. The recent International Monetary Fund projection in July has showcased clearly advanced economies are fast-tracking their recovery mechanism. Essentially, they're going to do around 5.6% as against the original projection of 5.1%. When it comes to developing economies, emerging markets, perhaps they should be doing around 6.3%. They have slowed down in terms of the overall vaccination administration. So that has destabilized a bit in terms of productivity, but still, they arguably, incrementally, they are doing well. Now, when it comes to the market momentum, this is what the revelation is all about from the IMF. Now, recognition of the fact we need to redefine ourselves. I'm sure Suruj is going to take care of this subject when it comes to reorganization in terms of business modeling. We have seen the digital ecosystem itself is going through extraordinary set of opportunities. The rapid acceleration, which my colleague Mr. Sharif has mentioned, is we are seeing even to redefine the financial service like us. We run a 110 billion Qatar Riyal balance sheet, over $30 billion, lending and investments, deposits, and borrowings across the globe with 20 different countries we operate. We know unless we redefine ourselves, we don't have sustainability. And that's what we need to do. Recognition of the fact your revenue generation has to be redefined with an enhancement. Ensuring rationalization has been the profound long-term value to be more cost-effective and convenient for the customers. restructuring of a debt world over. We have seen debt servicing capacity has been impacted. Business is disrupted. When a business is disrupted, your ability to generate revenue has been at stake. So globally, over 30 trillion has been supplemented to improve liquidity so that the financial stability comes in. We want to make sure business continuity is on from the disaster. And that's why sustainability matters. Every country, Qatar has put 75 billion Qatar Riyal, and again, postponing the installments, interest, and small and medium-sized entrepreneurs have been given an enormous amount of support, including some of the free facilities. So those are testament to see that economic recovery is in the prospects, but at the same time, reorganization of the business model, digital ecosystem, if you carefully see, it is interesting, exciting. We are really stepping into fourth industrial revolutions. And that's the change. The rapid acceleration we are witnessing today is going to improvise our way of living. We are more than ever interconnected, interdependent on each other. And that's why we need to understand there's no substitute for recognizing human dignity and human prosperity, eradication of extreme poverty, of gender equality, or global warming and climate change, healthcare for all, education for all. Now it's all radically getting redefined to support the convergence in real order between technology and redefined business model and the physical existence. So this is a new phase of the world, interesting world. One thing we know, our future generation is going to be better than we are. And that's the purpose, isn't it? We want to make sure we create a better world and better citizenship in this world. If that is the case, how? The payment mechanism will redefine, because this is an important opportunity. We thought it's appropriate to bring in this literacy to our relationship with our collaborative speakers today. They're all distinguished speakers and professionals in their own dictum. Let's see, what are the basic changes we are witnessing? Building a digital ecosystem is a key, and it's evolving to be a fine combination.
The goal in the transition from cash to digital payments is building a strong digital payments ecosystem. That means putting in place the technology, the partnerships, and the rules needed for digital payments to operate effectively. When the system works, more people will use it. When enough people use it, a tipping point is reached where it becomes harder to stay outside the digital payments system. Let's look at who plays a part. Governments set digital payments regulations and enforce them. They can also lead by example by making and receiving payments like salaries, pensions, and taxes electronically. Financial institutions issue accounts that enable electronic transfers. Payment companies authorize and settle transactions between payers and payees. Telecommunication companies transmit transactions between devices. They provide electronic channels to access financial services, and businesses and individuals make and accept electronic payments for the things they buy and sell. Building a strong digital payments ecosystem means linking these people and organizations in a way that shares the benefits of digital payments efficiently. To do this, government, business, development organizations, and individuals need to work together from the start.
That's the key. Collaboration is the key. As shown in the video, government, business, everyone has to, private business or public-private partnership, telecom companies, technology companies, look at the enormous value creation the fintechs have shown. Some of our leaders are here. So essentially coming together when it comes to ecosystems in the payment side, whether you are an acquirer, like Bank of America or Global Payments, or issuer, banks like us, or Visa, or MasterCard, or for the matter, American Express, credit associations, credit card associations again, gateways, PayPal, Stripes, name it. So you have enormous opportunity to come together in addition to independent sales organizations. Here comes another technology, contact payments. Watch this clip.
Michael, you mentioned small businesses as part of this. Give us a sense of what you're seeing with MasterCard, by the extent to which small businesses are drawing down on their credit as a practical matter, putting it on their credit card, or for that matter, just not buying things at all, maybe with reduced activity.
Well, we're certainly seeing an impact here. People are focusing on essential purchases like groceries and pharmacy purchases. There's a big movement from brick and mortar to e-commerce. But even where there is brick and mortar, where people are going face to face, we're seeing a big rise in what we call contactless payments, about a 40% growth around the world, and people going and just tapping their card because they don't want to hand over their card to somebody. They don't want to handle cash. They don't want to have to put in a PIN number. And so being able to just tap and go is a safe and secure way of making payments.
That's essence. 40%. That's rapid acceleration, especially this pandemic has created. Who's saying it? Michael Froman, MasterCard Vice Chairman. That's interesting. Then if you look at the explosion in mobile wallet, that's another interesting development. Watch this, the space at which it is getting in and the pace at which it is reorganizing the payment mechanism. It is very interesting to watch this clip.
Mobile wallets have become a major buzzword and are a growing factor in payments. So what are they, and how can you start benefiting from them in your e-commerce business? A mobile wallet is software that stores a shopper's payment details, like credit cards or bank account information, and allows the shopper to use that information to easily make a payment or purchase. Some examples include Apple Pay, Android Pay, MasterPass, and Visa Checkout. The main benefit of a mobile wallet is to make checkout quicker and easier across devices and more secure, because the shopper doesn't have to re-enter their card and billing details every time they make a purchase. How do you benefit from this as a merchant? Well, since checkout is easier for the shopper with a mobile wallet, then you can increase your conversion rates by just allowing your shoppers to pay using a wallet. Removing an obstacle to checkout means that fewer shoppers will abandon the shopping cart and more will finish the checkout process. So how do you enable shoppers to pay using a mobile wallet? If you're using BlueSnap's Buy Now hosted checkout pages, these payment options are built in. Simply enable them in your account settings and they'll appear on your checkout pages. If you're using BlueSnap's payment API, you can offer these mobile wallets by adding the relevant wallet button to your checkout page and then using the wallet info to process the transaction through the API as usual.
That's it. The message is adoption of digital payments will contribute to surge in spending in mobile wallets. And that's the name of the game, isn't it? Now, another interesting development is Fintech. The kind of diversity they brought in, ease and convenience, cost effectiveness, and the value chain they have embarked in is going to be a beauty for the entire payment industry. And a significant portion of the Fintech are all on this industry, payment industry. Now, watch this clip.
Global investment in the fintech sector has reached almost $100 billion since 2010. If you look at 20 of the world's major economies, you will see that about 30% of their citizens use at least 2 different kinds of fintech services. In China and India, over 50% of consumers use tools like money transfers and borrowing and financial planning services, which are part of fintech. Many businesses whose models were based on the use of cash are adapting to the change. More and more, the traditional banking payment services that baby boomers grew up with are changing. Today, it's not unusual to see iPads equipped with card readers, retail outlets and services that only exist online, or people paying bills using e-transfers. The rise of peer-to-peer payment platforms has meant that people can make payments without going through a bank or using cash. It's made paying for things more convenient, especially online. However, fintech payments also have their issues. As more payment systems go digital, cyber attacks become a bigger risk. Digital currencies like Bitcoin are not accepted in most places, and their value can go up and down like a yo-yo. Fintech is changing the way the world operates financially, and the opportunities are exciting. Nevertheless, its challenges are real, and they're only going to get bigger as more of the world embraces it.
This is only going to get bigger. Look at PayPal. Look at Stripe, TransferWise, Headnote, Flywire, Venmo, name it. They're all global giants. And in this part of the world, we are also seeing the rapid acceleration. It's going to redefine the space in terms of customer convenience. Next, we have to look at the big data. That's completely getting monetized. So, very interesting phase. Information is power, we know. The data, big data now, is going to play a significant role in terms of analytics and again, how to redefine your personal life and professional life to make sure everything is effective, optimized, value-driven.
Connecting user data from the intelligent edge to the core data center can have some big effects on a retail environment. Here's how it works with Hewlett-Packard Enterprise. At the edge, as customers enter your store, their smartphones connect to your store's app. In-store sensors track all customer activities as they move around the store and select merchandise. Back at the core, customer profiles and corresponding sensor data are analyzed. Personalized location-based sales promotions are automatically pushed to each customer while they shop, as well as real-time recommendations based on customer profiles and helpful navigation of the store for items on a preloaded shopping list. Checkout is as simple as walking out the door. An online invoice is sent directly to the customer's smartphone using preloaded payment information. By harnessing data coming in from the edge, everyone wins. Customers benefit from faster, more personalized shopping experiences. You benefit from gaining insight into customer choices and shopping practices, more effective inventory management, and even recapturing lost purchases in-store with online ordering options.
We have data analytics is a catalyst for convergence. That's what we are understanding this, and gives greater convergence between lending and payments. So it's all data-driven. So what does it mean for the future? That's what we need to articulate, isn't it? The world is becoming cashless. Even during this pandemic, more than the physical interface, the digital box, high voltage digital boxes, cash deposit boxes or cash withdrawal boxes have been widely used. As Sharif has just mentioned, we are seeing an enormous amount of transaction-based processing getting shifted from brick and mortar to digital advantage. Customers see the value in it. So there are countries who have experimented it, and they have showcased enormous amount of discipline in ensuring this is the right way to go. Sweden is a classic example. What's this story? So Nordic countries, in substance, they are in rapid acceleration in P2P to enter payment mechanism through cashless accountability. And this clip will testify that.
Sweden is predicted to become the world's first cashless society by March 2023. By then, cash will no longer be used as a means of payment in Sweden. Sweden has long been open to embracing new technologies, and its financial system is no exception. In 1661, Sweden was the first country in Europe to introduce banknotes. If Sweden does become a cashless society in 2023, it will have taken 362 years to transition from being the first to adopt banknotes to being the first to stop using them. Over the past few years, almost all purchases in Sweden have been made electronically by debit or credit cards using contactless chip and PIN cards, which have replaced the less secure cards with magnetic strips. More than 80% of all retail transactions in the country are now conducted electronically. This is similar to the decline in cash in other Nordic countries, including Finland, Norway, Denmark, and Iceland.
I personally visited Finland. I've seen the transformation in the society itself. That's a beauty to watch. 100% digital by 2023 Sweden. Look at the acceleration. What is next? It means it's not necessary at individual level. Institutions, countries, continents are getting converged on becoming cashless. Internet of Things is going to play a big role in the whole acceleration of payments. Internet of Things means that consumer can pay almost any way possible. Watch this play.
Brennan's home. Did you find a lamp for your dad's room?
I think so. What do you think?
I think it's a lamp.
Yeah.
Great, let's go pick it up. Call us a car?
Locating available car.
Use our Visa card to pay now.
Come on, Brandon, let's go.
Whoa, why? Hello,
How can I help you?
I'm looking for a TV I can mount on the wall.
Sure. Here's what we have in stock.
This one looks good.
I'll add it to your cart. Which payment plan would you like?
Let's do 12-month installments.
Tap here to check out.
Interesting, isn't it? The way we live has changed. Next comes open banking. That's some huge revolutions, and application programming interface are all going to change the payment mechanism. That's a new kind of gateway to payments. And API is a game changer in substance. Let's watch this play.
Over the last decade, large and successful digital players in various industries have used open application programming interfaces, or APIs, to connect their services with apps and websites of third parties. Today, open API technologies have evolved to an extent that allows them to be applied by the financial services industry, where security is key. This opens up new opportunities for banks and other financial services providers to offer innovative digital services themselves. The emerging business model, open banking, empowers end customers to control and share their personal account data with third parties of their choice through offering a new range of products. As a result, financial services become more relevant in the digital space for end customers, and compliance with new regulation is made easier. By embracing open banking, banks can build on their key assets, trust, reach, and know your customer to grow digitally.
It's an extraordinary transformation. It's private banking or treasury or trade, everything is getting redefined. So digital-only bank will play a bigger role. Then comes a huge fire, that is artificial intelligence. That can change everything and anything. And that's where we need to understand this is going to redefine the payment mechanism. Watch this.
Did you know? Every time you use your card, Visa's AI is learning. Every purchase you make helps Visa get even better at protecting your next transaction. Visa's AI doesn't know your name or exactly what you bought. It sees activities and patterns to learn what your typical purchase behavior looks like, so that even before you make your first purchase, we can spot suspicious activity. For every attempted purchase, Visa's AI assesses fraud risk, so that the bank that issued your card can approve or deny the transaction, or send a text asking you to confirm an unusual payment. Let's take a closer look at how it works. Every Visa account has a profile of previous transaction data. Each time you buy something, the account profile is updated and compared to the spending behavior of more than 3 billion other accounts, making roughly 180 billion annual transactions. This behavior is grouped into clusters, and your account could be in hundreds or thousands of these groups. The activity in these clusters helps Visa understand whether a transaction fits a pattern or departs from the norm enough to be flagged as high risk for fraud and possibly declined by the issuer's bank.
That's the way the artificial intelligence is on the payment side. Again, on the facial recognition side, it's doing a lot. Can we rope in everyone? Rich or poor, income inequality needs to be fine-tuned as per the global sustainable development goals. Now, we need to understand financial inclusion is the key. That's my last part. We have to understand financial inclusion is going to change the game in terms of getting gross welfare to global human prosperity. That is the key. The payment industry is doing that in substantive terms.
Give us a sense of what this initiative is. As I say, it's an expansion, as I understand, of what you have been doing.
Well, that's right, David. Thank you for having me. About 5 years ago, MasterCard committed to bringing 500 million people who had been excluded from the financial system into the system. We achieved that goal last quarter, about 9 months ahead of schedule, and we decided that now more than ever, it's important to make sure people have access to the digital economy. So we doubled down. We've raised that goal now to 1 billion between now and 2025. We've also said it's really important to bring 50 million micro and small businesses into the economy. And because there continues to be a gender gap when it comes to financial inclusion, women tend to lag about 9% behind men in terms of being included. We're going to focus in particularly on reaching 25 million women-owned or women-run businesses around
That's the
world.
change. There is no intermediary. There's no middleman. You get in and rope in everyone to be directly credited. There's social security or pension or any payments to be made by the exchequer. That is a direct method. So you know the recipient is standing to gain. Just to conclude, if you look at the big picture, today's changing face of the world, payment industry trends are quite mind-boggling, interesting, because data is the most valuable resource, number one. Number two, providing a seamless and secure mechanism. So you don't have, even fraud detection. You can look at objectively and mechanize it to see that it's error-free. Payments are going to be truly global and contribute to financial inclusion. And this is the message I want to give in terms of concept. The light speakers, they have their efficiency in their own verticals. And let me invite them one by one to enlighten you. What are the changing face in terms of the payment industry, which is in store for an exciting future forward?